All right. Back to work. Back to work. You can count all that money later on once we're done. We're not done yet this week. We got one more day left this week. Tomorrow we get some more big inflation news tomorrow. Some of the biggest news of the week tomorrow morning. It's the end of the week tomorrow. Always a great day to be a trader. And I'll tell you, the markets are giving us some really great clues. The charts look great tonight, and I have a number of trades. There are two specific types of trades I'm tracking for tomorrow. And as always, I'm going to cover all my favorite trades in the video tonight. By the time we're done tonight, you'll have an easy, simple roadmap to make some more money tomorrow to finish up the week here with a bang. Now, before we jump in, though, and go over my favorite trades here for tomorrow, make sure you subscribe to the channel. Hopefully by now you guys know why you got to subscribe. That way you don't miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a hell yeah down in the comments section. If you had a great day today, let me know down in the comments. Thank you so much for tuning in, supporting the channel. Man, oh man, what a week it's been. We got one day left though. Let's finish up with some more green tomorrow. Now, charts are all ready to go here. NASDAQ is locked and loaded. S&P and the SPY is all locked and loaded. Got some pretty easy clues here on the charts tonight. We're bullish overall on both the S&P and the NASDAQ, and it looks like we're going into some trading ranges right now. We've got some really big corporate earnings next week. Next week is peak week in earnings season. We'll talk about that in a moment. These bull markets into trading ranges. I love range bound markets. They tell us to look for two basic types of trades tomorrow and potentially into next week. So we're going to talk about those two specific types of trades, long side trades and some short side trades for tomorrow, because I think the game plan will be pretty simple once we kind of go through the whole thing here for tonight. Now, before we dive into the entry tactics, before we talk about the specific kind of two types of trades I'm tracking for tomorrow, we need to check our schedule for tomorrow, because tomorrow's a big day. There are three things I want you guys to be aware of for tomorrow. Now, we just heard from Intel. Intel was a lot like Tesla. They kind of missed their expectations, so markets will likely be reacting to that overnight. That's kind of one variable I don't have much control over, so we'll see how that goes overnight. Tomorrow, though, you may not know this, but personal income is one of the most important. It's like the baby brother of the CPI number when it comes to inflation. So one of the reasons why I think the markets are consolidating into ranges right now, one is because of the big earnings next week, but also two, because this is a huge deal tomorrow. Now, the hard part about my job right now is that I have no idea what that number will be and how the markets react tomorrow. That's a big wild card. What I do know, though, is tomorrow we are probably going to see some fireworks at 8:30 Eastern time. So please be careful in the pre-market. Let that whippiness subside, and then we'll update our charts and then go looking for trades the rest of the morning. One of the most important things that you want to keep in mind for tomorrow's a Friday. Now, a lot of people say, well, you can't trade Fridays. You can't trade. Well, you can. The thing with Fridays is this. My mindset on a Friday, you have to understand, Fridays are going to get illiquid. The volume will drop, and traders tend to make bad decisions on Friday afternoons. So the bottom line is, my goal on a Friday, my mindset on a Friday is get into trades early when I'm fresh and when the markets are good. Try to remove risk, take profit early, but I always like to leave a runner on Friday afternoons. Go back and check for yourself. Go back and look at the last couple of Friday afternoons, and you'll see, not every Friday, but a lot of Fridays, they just run and they run and they run, and that's because Fridays get illiquid as they get into the afternoon session. So three things you want to think about. Again, Intel reaction overnight, the personal income number, how will the markets react to that? Who knows, right? Big variable for tomorrow. And again, that Friday mindset, get in early, take profit early. Don't close the whole position though, right? Take a little bit of profit, get rid of the risk, and leave those runners. I'll tell you, we've had some huge runners on Friday afternoons. You do it right, and they'll make your whole entire month. All right, so keep that on your radar for the news for tomorrow. Now back to our charts, because we all know this by now, right? The money is made on the charts. Let's now go over my favorite trades for tomorrow. It's a pretty easy game plan. I think you guys will like it. And again, as I mentioned earlier, it definitely kind of feels like this market is starting to consolidate here into a range. It makes perfect sense. We got a big inflation number tomorrow morning, and we got some huge earnings next week. Amazon, Apple, Exxon. I mean, the list just goes on and on. Microsoft. So it makes sense we're going to get some consolidation ahead of those numbers. The big clue right now is on the tick charts. Let's now drill down to our tick charts right now. We know we're bullish, right? We know we're range bound right now. Let's go looking at the tick charts. The tick charts, I think, are really where the most amount of useful tradable information. It's always like this. Now, I don't trade off a 60-minute chart, right? I trade off tick charts. This is a 7,000 tick chart in the upper left-hand corner, and that yellow line right there, in case you're watching for the first time, that is the 21 EMA, in case you're tuning in. The tick charts right now are basically just a bull market into there's kind of that big trading range we're seeing on the 60. Now, the most important thing that you have to understand about ranges, and we talk about this a lot in our free video classes, right, is that ranges are magnets and price will rotate back and forth, all right? So the rotation aspect is really important. We're going to buy low and we're going to sell high around the edges of these ranges, all right? So the rotation aspect is very important, and we're looking for basically to buy low, sell high, buy low, sell high. Now, we have an overall bull market. We're overall bull market. So with that said, we're more likely to get a breakout going higher, okay, because we're an overall bull market. So we definitely will look for some breakouts going higher, much more likely to see a breakout higher than to see a successful breakout going lower because we're overall bullish, all right? So the most important thing now that you understand the basic fundamentals of how a range works with a bull bias, is we're trading that rotation. And in my trade room, I always say failures at the edges and traps as we rotate. Failures at the edges and traps as we rotate. Failures at the edges and traps as we rotate. Now, this will make a lot more sense if you guys have taken my free video classes, right? So failure patterns and trap patterns are going to be a lot of the game plan back and forth as we go. So for example, right now we're up around these highs and we should be trying to rotate back down to retest that low. Later on in this lesson, I will talk about breakouts going high. I got 3 breakout patterns. We'll talk about going higher here. Now, if I want to sell off the high of a bullish bias range, momentum is going against me. And whenever I want to short, going against overall momentum, I want to use what I call a crown reversal. These are very simple. This one right there, right in front of you. It's very easy. We're going to use that failure pattern you guys learn in the free video course, but now make them try twice. Once, twice. Remember, lower low in price and a trap above that high. That is the pattern I like to use whenever I'm trying to short. Remember, it's a bull market overall. That's the variable here. We call these crown reversals. In my free video classes, these are called 2-try failures with a bull trap signal off of that high. You'll see a lot of examples of those in the free video course. Now, I said earlier, right? It's a failure at the edge. And then how do we trade this as it rotates lower? It's a trap as it rotates. What's a trap look like? It's almost the same pattern, really. It's a lower low in price and a trap above that high. All right? This is ultimately the pattern you're looking for here, right? If we go up, it's a bull trap, crown reversal off the high. Go lower, it's a trap above that high. Failure off the edges, traps as we rotate. All right? So as we go up, buyers once, buyers twice. You want that high, right? You want that trap high because we're overall bullish. And then as it rotates lower, where does the market want to go? It wants to take out the other side, right? Remember, focus on the edges of these ranges. That's your failure, your failed breakout, right? Your failed breakout off the high. That's your buyer failure. And then as we go lower, low in price, it's a trap. It's a trap as we rotate going lower. All right, that's pretty simple. One more thing here. Sometimes we don't get that. Sometimes they go up and we don't get that beautiful 1, 2, and that bull trap for that crown reversal. A lot of times what happens is it'll go up and get whacked back down. When it gets whacked back down like that and it begins to grind and grind, we call these V-tops, right? V-top reversals. They're not fun. They're not fun because they don't give you a great entry up there, but they are pretty easy to trade. So we draw a trend line off those lows, bring it up around that high, and then what I always do is look left and find one of those prior swings. And we talk about this a lot in our trade room. The first test, right? The first test is the best test. I like bull traps. This could be a bull trap like this one. It could be a buyer failure. It could be a pullback combination. Really any of the entry patterns that you guys are learning in the free video course. Which reminds me, let's stop for a second because we've covered a lot of information so far. Talk about failures and trap patterns. If you've been here before, you know these already, but if you're watching for the first time right now, this might be way over your head. Not a lot of people look at charts like this. So if you're here for the first time and you want to learn more about all these entry tactics, I teach all these setups. I have hundreds of examples of bull traps and bear traps, trading rotation. I teach all of this in our free video classes. I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course. The strategy you'll learn in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. More importantly, it'll teach you 4 of my favorite entry patterns. You'll learn bull traps, you'll learn crown reversals, you'll learn all my favorite setups. It's all linked up there in that free video course. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best trades each day, if you're struggling to qualify for a funded account at Top Step or Apex, hit that link up there, take that free course, or if you can't grab the link up top there, I'll put all the important links down in the description of the video tonight. I'll put my free course links down there. Definitely take that free class. If you haven't done so already, it'll give you an easy roadmap to make more money. We trade together every morning at 8 o'clock Eastern time in our members trade room. I'll put the information for that down there as well. And I'll also my Twitter feed down there too. I'm on Twitter during the day. If you're on Twitter, give me a follow. All the information is in the description there of the YouTube video. All right, so now we know, right? Again, market's now trying to rotate back and forth, right? Failures at the edges, traps as it rotates. Now, as I roll lower, and again, it'll be here. This is the pattern I want right there, right? That's the pattern you want. As we go lower, remember, failures at the edges. Now, as we rotate lower, we pull back. The bears try once. The bears try twice. Please remember, I don't have a crystal ball. I don't know how far this thing will go. For all I know, it might go all the way down here and then back up. I don't know. Nobody does. So once we get into support levels, we don't pick the bottoms, okay? That's a rookie game. I'm going to wait patiently for the bears try a couple times and then think about where are their stops? If you're a seller, and you get trapped at support with a bull market range above us, if you get trapped below that moving average, what happens if you get stopped out? Think about it. You become a buyer. This is one of those scenarios we talked about last night where everyone is a buyer, right? In these scenarios, when the bears get stopped out, everyone is a buyer. Why? Because the buyers are buying low. That's what buyers do. They buy low in bull markets. That sellers now become buyers because when you get stopped out of your trade, you're buying your way out. You get squeezed, right? These are scenarios where everyone is a buyer, and it oftentimes produces big moves like we saw early here this morning. Now remember, what's the game plan after it triggers? It's a failure. It's a failure at the edges, and then as we go higher, what's the entry? A trap as it rotates. It's simple, right? A failure at the edge and a trap as it rotates. And when I say rotation, remember, it's going to rotate back and forth like this until it gets a breakout. But remember, we're an overall bull market. The odds of a successful breakout down here are they're not impossible, but they're very low, right? The odds are much better for breakouts going higher, which again, we'll talk about that in just a few moments. Now, if we're really lucky tomorrow, we'll get a strong run down. The bears will come in. They're going to hold one of these underbellies, right, of the range. They're going to drive the market back down, and they'll retest that low. You guys know this out of me. We got a beautiful one today on the NASDAQ, right? Strong run down. They will likely try to hold that pullback and retest the low. At that point now, do it again. Okay, do it again, because everybody who sold short right there, they're probably going to take their profit where? At that low. So it's safe to say that sellers who got short here, they become buyers at that low. They sure do. Everyone's a buyer now at that low. Trap those rookies in once, twice. Remember, failure at the edges. And then as we go up, pop up, don't chase it. If you learned one thing today, don't chase these things going higher in ranges. Wait for that higher high in price and grab that beautiful bear trap right below that low. Again, a failure off the edge. And in context, this is called a double bottom retest. It's a range overall. Want to buy that low. If it just takes off the downside, the bears hold that pullback, okay, trap the rookies in. Remember, it may keep going. It may keep going. I'm not blindly buying that low. So one try for the bears, two try. Why two tries? Because I need their stops. I want their stops to fuel that move. I want those stops. I want those stops to get hit to fuel that move going higher. I want those stops to fuel that move going higher. That double bottom retest, failure, the traps. And again, if you're new here for the first time right now, that free video course, log into the website and you'll see like 100 or something examples of these exact patterns on the website inside the free video course. We also, of course, have that V bottom. So remember, there might be so many buyers down here. We got that gap still open from last night's video. We mentioned last night, right, that gap is still there on that weekend gap. We got huge inflation number coming tomorrow. Nobody should be surprised if we tank and run all the way down. There could be so many buyers down here that it's just boing right back up into that trading range. The hard part about this is it doesn't give you a good signal. Unless you're gambling, right? I can't pick that bottom, right? It's just too risky. What I'd rather do is once it begins to grind and run higher, what do we always do? First of all, we do not listen to that voice in our head, because I'm not the only person that does this. I know I'm not the only person, but right when that V bottom happens and it begins to grind up like this, I swear that voice comes in and says, "Come on, dummy. You're going to miss it. You're going to miss it." I've been doing this almost 20 years now. I still have that voice will not be quiet. What I'll do though is don't chase it. Because as I said before, when you get a big move like that, they're going to try, right, to take out that low. They're going to try to take out that low. What do? You mark off those highs. You mark off that low. And my personal favorite is look left, find one of these prior swing lows and try to get in, right? Try to get in off that low. Now, sometimes you won't have it, right? Sometimes you won't have it. So sometimes you'll see a trap like that. A lot of times, though, you'll get under the moving average and you'll get one of those failure into pullback combinations that we teach in the free video course. Like today, right? Kind of a hard push off those lows, right? They grind up, right? We're marking those levels, pulling back on it, and now they try. One of these will get lit up like a tree like that. That's what you want to be on. That's that failure. And again, if you look closely, a failure into pullback combination. Now, let's quickly cover breakouts, right? There are three basic types of breakouts going higher. Remember, it's an overall bull market, so the odds are much better for a breakout higher than they are for a breakout lower. If we begin to rip and go in higher here, I've taken the range you can see here, and I marked up the amount below, and I marked up the amount above. We need to get through this area convincingly to call this a breakout. All right, so really this whole area right there, right? That whole kind of area right there. We have to get convincingly through that area, okay? So if we just rip, and again, big inflation number tomorrow morning. If it rips higher and we start seeing this shallow pullback and that higher high in price, you're going to see everybody pile on and buy that bear trap. Like right back there. Like right back there, right? It rips up, shallow pullback, higher high. Everybody piles in underneath that low. Why? Because they're buying low. They want to buy low. Smart money wants to buy low. Strong run, higher high in price. It'll get just a little bit above the moving average. Get that higher high in price. That's going to be your bear trap Again, if it rips, right? Bear trap. Remember, this breakout leg is usually the measuring leg. Okay, the breakout leg is the measuring leg. So we take the size of that leg, we then copy and paste it up, and that will give you your target up there. All right, combine that with this big pendulum swing, right? The bigger pendulum swing right there, and that is what we're looking at, kind of a runaway move going higher. Now, another way to try to break out is if it really races higher. Remember, what is prior resistance now becomes support. So breakout pullbacks are fantastic, right? We love breakout pullbacks. Just look back in time, and we had one earlier on in the week, right? There was that trading range, that breakout, and that pullback. If you've watched my videos this week, this should be a review, right? We know this is very common. So if the market rips, and again, we see lots of proof going through this high here, okay, now if it rips and races higher, right? Rips and races higher. We're not going to buy high up here. No. That's not smart to do. Now, think about what was resistance now, and now flip that, right? Flip that into support, right? Now, what was resistance now becomes, come on, Joe, now becomes, right, support now, okay? So we break out, we pull back, and in these cases, what we want to do is look left, find a new channel off that high, mark off that low, and the goal, of course, is to combine those prior highs, right? That becomes support now, and these will almost always do this. They'll almost always collapse under the moving average, and then once they start going into support levels, again, previous resistance, now becomes support, what will happen is the bears will struggle. They'll struggle, and that's exactly where a failure into pullback combination could come in. And remember, the breakout leg is the measuring leg, right? The breakout leg is the measuring leg. So mark up that breakout leg, okay? That now becomes the size of your next big target, all right? Measured moves are very common. We talk a lot about those in the free video course, all right? So just as we saw back here, almost identical, right? Almost identical, right? With this pattern back here. There's your range, there's your breakout, there's your pullback. Okay, we don't know how far it will go. What we do know, though, is that once it finds its bottom and the bears try a couple times, right, bam, right, that's your short squeeze, that's your breakout pullback. All right, that's the second way to do it. The third way is to pop and grind. Pop and grinds are pretty common as well. It'll pop up and it'll begin to grind. These can be a bit difficult because they're very slow. And oftentimes they can drive you crazy. But the key is, again, mark off that high, mark off that low, look left on this because, again, all the previous levels of resistance will likely now get flipped into support now. Look left, find some prior swings, and again, get under those prior swings, get into these key areas of resistance, get underneath that 21 moving average. Don't pick that bottom. Get those rookie bears trapped in, right? Get those inexperienced traders and pick their pocket. Eat their lunch, right? Eat their lunch at that low. Now, on a pop and grind, okay, pop and grinds, the breakout leg is that pop leg. Okay, the initial pop leg is the breakout leg. So that's your measuring leg. Okay, forget about this stuff up here and then anchor it right there, and that will give you that target up overhead. All right, guys? And I know I'm going over a lot right now, and I don't mean to go over this much stuff, but there's a lot of ways to make money in a range market with a bull bias. That's your pop and grind breakout. And again, a lot of examples of that inside of the free video course. All right, guys? Now, let's talk about the NASDAQ next. But again, on the S&P, it's very simple, right? Buy low, sell high. And remember, you want to tailor your entries based on whether or not you're going with directional bias or against that directional bias. All right? I'm getting excited for tomorrow. Hopefully you are too. Let's grab the NASDAQ now. How about some NQ? Now, the NQ on the higher time frame right now is pretty much identical to the S&P. It's a bull market into a trading range. And whenever we have a bull market like this into a trading range, we know that buyers are going to be trying to buy bear traps underneath that range. Let's now go over to our tick charts again, and you'll see right away, this is quite different on the NASDAQ right now. It looks like the NASDAQ is somewhat similar, right? Bull move up. It feels like they're trying to make this into one big trading range. Ranges, they love to rotate back and forth, just like the S&P. We're an overall bull market. That part is the same. What is not the same, though, is that we have a very strong move down. That double bottom was a bit stronger than we thought it would be because it went so high up. Now, why is it important? Well, because anytime we see a strong move down like this, we expect a pullback, hold levels of resistance, and retest that low. Okay, then you probably know the answer to this now. We can then look for that double bottom reversal. Okay, so that strong move down is a really, really important clue because it tells us be patient to wait for the entry signal. We did a masterclass on that last night on the newsletter. If you want to go back and watch last night's video, another very important clue is this previous range. Okay, this previous range right here, this previous range right there. And we talked about this last night. A lot of times what happens is when you get these breakouts and pullbacks, right? They held off that area. That's that classic breakout pullback we talked about last night. We talked about a moment ago here on the S&P. We oftentimes see the market will come all the way back to that prior range and almost kind of just kiss it, right? And then right back up again. Okay? When you combine that previous range breakout along with that measured move I had on, remember, when you have a range like this and you get a breakout leg, the breakout leg is the measuring leg. So that gives an idea of where that market wants to go down here. I would not be surprised at all if this thing ran down into that range, possibly all the way back to that bear trap zone. And again, we're not an overall bear market. We're an overall bull market right now. You have to think there are plenty of buyers waiting down here, just licking their chops right now. They would love to get in, right, and buy that dip right back up into that trading range. All right. So let's talk about this right now. Let's talk about this. A lot of the same stuff will be in play that we had on the S&P, but again, this strong move down, the S&P does not have. Strong run down, we should try to retest that low. This is where that double bottom retest comes in handy, right? We're an overall bull market. I could be a little more aggressive on it. If I can get these bears trying once, trying twice, what was it again? Failure around the edges, right? Remember, around the edges, failures. Failure around the edges. It's a two-try failure because we're so bearish in the short term, not in the long term, but in the short term. Use those stops to fuel that move. That's your failure pattern. And then as we go higher, it's always going to be a bear trap or a trap entry, right, as it rotates. Right? So double bottom retest off the low, AV bottom reversal off support. Like think about that breakout pullback zone down here, right? Nobody should be surprised if this thing runs lower and just boing right back up, basically a breakout pullback off that previous range. If it grinds and grinds and grinds, what do? You don't chase after it. You don't, right? You go out, you mark that high, you mark that low, you look left, right? You've got to find those prior swings, right? If you can't get a prior swing, if there is no prior swing, then look for a failure pattern, right? Get underneath the moving average. Let those bears get short off that 21 EMA. There's your failure pattern right there. And again, as it rotates higher, keep looking for those bear traps as it runs. It's a ranged market, so it's going to want to rotate all the way back up and take the other side of that trading range. All right? So I think that's a pretty easy game plan. Very similar we saw or we talked about on the S&P. Now, if we end up ripping higher here, and then all of a sudden we start seeing these buyers come out, and they're trying once, and they're trying twice, there's that crown reversal pattern we talked about earlier on in the video. All right? So again, if it rips, it'll go right on through these highs, right? It'll race right through it. And think about it this way too, the amount below that range, the amount above that range. This gives you a pretty easy idea now, right? Just like that, right? That area right like that now, right? If we rip and run higher and keep going, probably a breakout. If it races higher like this, think about that crown reversal, that lower low in price, that bull trap high. And then what do? As it rotates lower, it's always going to be those bull traps, right? Always going to be those bull traps for that run back higher. A crown reversal pattern is basically a two-try failure with a bull trap high. And again, I know this is all new to a lot of folks watching right now, but this will make sense once you go to the video course. I mentioned linked up in the description below here. And as we go lower, right, find those lower lows, grab those, right, grab the trap high. And if we're lucky, we'll get a channel off those lows, off that high, and then grab that short right, back down again. If it races up and then gets whacked back down, right, remember that V top we talked about? Don't chase it. Mark off that low, mark off that high. And again, I want that first test. I want that first test off the high of that channel. It could be a bull trap like I'm showing you right here. It could be a buyer failure pattern. It could be a pullback combination. Any entry pattern will work off of that high because again, we are rotating back and forth here. All right. If it does race higher and keep going, right now we've broken through areas of resistance. Flip this now into support. Think about now that channel at the high, off that low, look left, and again, we've covered a lot of this already, so look left, get underneath that prior swing, get underneath that moving average. Remember, the pop leg on a pop and grind like that is almost always the measuring leg. Once you know how deep the pullback is, get that bear trap, get those seller failures, squeeze those stops, take some profit off to retest the high, half off at that high, and then again, the size of that pop leg is the size of that next big target going overhead here. All right, pop and grind, or it rips right in that breakout pullback we mentioned earlier on the S&P. All right, guys, I think I've covered a lot of this stuff. I know tonight was a bit more complicated because the NASDAQ's very different right now than the S&P. And the most important thing, but the most important key takeaway is trade that rotation. Buy low, sell high. Remember, filter your trades based on that directional bias. I'd be more aggressive buying low, more conservative, more patient selling high. And when we're more likely for a successful breaker going higher, we're not as likely that a big move down keeps going down. All right, we're more likely to pop up because of the overall bull market. All right, guys, as always, thank you so much for watching all the way to the end. Hope you learned a bunch on this stuff tonight. Hopefully tomorrow, if tomorrow was half as good as today, I'll be a very, very happy trader. Now, the best place to be tomorrow morning is with me tomorrow morning in our morning trade room. I'll put all the important links in the description of the YouTube video, my free class links to get started, my trade room membership links, and of course my Twitter feed will all be down there in the description. Fantastic job today. One more day left tomorrow. Let's finish up strong tomorrow. In the meantime, be well, be nice to each other, and you better be here next time. We got peak week earnings coming next week. Buckle up, kids, to next week's gonna be a doozy into the end of the month, guys. Thanks for being here. Be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.